night, everyone. Today is Monday, November 14, around 10:30 p.m. New York time, and we're gonna go with the daily technical video day, guys. The shopping at first keep going, and what we see on the market is a market trading. A market trading in a contracted range that should broke either side, of course. Now, this price action that we're seeing for the last, I would say, 7 days or a little bit more, is confirming in some degrees the idea that we've been proposing, that we are in the B way of the move that started in risk on the first week of October and ended at the end of the month. In other words, the whole October month is being consolidated in this move. Now, before we get too deep on it, I would like to mention, guys, that remember, some degrees, sometimes triangles, sometimes triangles are very dangerous, because what it looks to be a bullish triangle can become a bearish triangle, and also can become a bearish nest. Keep that in mind. I mean, because we see a lot of sideways consolidation in the whole market, and we don't want to get caught in an wrong idea. Now, the idea of this video tonight is prove to you guys why do we think that that's been the case, and what do we think that is going to happen. Now, this price action right here, this is the S&P mini. This price action right here, it looks contracting. It's clear a three-way to the outside, but also I want you guys to take into consideration that the move to the downside, they are very sharp. That's how sometimes you got caught thinking that you are in a bullish triangle, and technically where you are is in a bearish nest. I don't say that this is the case, but I just have to mention to you guys, because it can be part of the whole scenario. Now, for now, let's think that we are in a bullish triangle that is going to break to the upside, and is going to prove that the whole dollar strength is part of a B way, or correcting the move that started, like I say, on October the 2nd to October the 27th. Let's go with that idea, and then that the S&P is in the scenario that we have, that we're doing an S way, when the S&P is going to keep going higher to around 1370, 1400. It's just the case. It's amazing, but that's what manipulation is all about it. I mean, any waiver can say that this is a bullish triangle. Now, like I say, I've seen many, and that's why market correlation is so important when it comes to trading. All right? So, being so important, the market correlation, let's move on to the dollar pairs, to oil, to everything. All right? Now, let's move on to the US dollar. On the US dollar case, again, you can make the case for the triangle, but you can make the case on the US dollar that this high at 78.16 is going to be taken sooner or later. The reason being is that the decline for the high is a three-way move, making the case that at some degrees, either from here, or even less, like from here, the US dollar is going to get strong. We said yesterday on the seminar that the open should be sold or should be bought, and that's exactly what happened. Unfortunately, we didn't get filled on the trade, but well, I hope one more time that some of you guys get the advice. Now, I say this because the decline is in 3, and then that makes the case that if it's a triangle, this is A, and then you got A, lesser degree, B, C, D, E, and it's gonna go higher. If this A, instead of being here, is right there, let's put it like this, and then you got A, B, and then we're gonna get A, B, C to around this area before again going higher. So at this stage, we believe that the dollar minimum is gonna reach the area that we've been mentioning for a while, around 78.70, that the dollar is gonna reach around that area. That's 134, 133 and a half on the euro before any weakness. But look, guys, this is what we were meaning. Look, the price action right here, contracting. Very hard to count it as an impulse on or to the upside. But look, more strong, more trending price action than this. So for now, let's not worry about those scenarios, but we believe that the dollar at around 79 is gonna get weak. All right. Now let's take a look at oil. Oil looks like it's ending a cycle. Now the big question on everyone's mind is this is the whole move? If this is, for me, it's a three-way move. 1, 2, 3. Now, if the S&P is in the bullish triangle, and if risk in some degree is gonna trade higher, the most likely scenario in oil is weirdness and then bouncing from around bouncing from around 93 and a half, which is the previous 4, and then going higher from there. And that fifth way in oil is gonna make the next leg in risk and the next leg of weakness within the US dollar pairs. Now copper also looks like it looks bullish, in my opinion. You got a clear 3 with a strong recovery. Now that can be the case. Also copper can be doing like a type of triangle, but again bullish to around 425, bullish to around 425, in my opinion, being the case that A is towards more when we have been mentioned on the dailies, on the weekly chart. All right, now let's move on to the individual pairs. On the individual pairs, let's start with the euro dollar. The euro dollar, 3 scenarios, or 3 scenarios, like the dollar. Either the triangle, when we have A, B, C, D, E, and lower. Now, let's take this triangular scenario out of it. Another scenario, A, B, C. As you guys know, I got my question to this being a 5 waves. And then you got A, B, and then you got A in 3 waves. You got B, and now you end in A, B, and then C lower. That C should go to around 132.27, 133.80 area. And also depends of the legs right here. It can go easily to 134 area, which is the 76 4% retracement of this whole move. Again, We get back to the same idea that we say on the dollar. Look, guys. Look the move. Sharp, one direction. Look the move. Consolidation. Choppiness. Now, very hard to count the names here. Only the way that you can count the names to the bear side is like this. But in that case, you have 1, 2, 1, 2. This is going to make a 5-way move with the new low. Another 1, 2. It needs to be an extremely event that create a downside move so powerful like that. But well, you never say never in trading. My favorite idea is that this is a B way of the D way, and that the euro is going to trade higher, as we have mentioned before. Now, let's move on to the clear structure in the market. I want to show you two, guys. First, I want to show you the euro CAD, as we mentioned yesterday. Look at the euro CAD. A very sharp move to the upside, corrective. And look at this. You got A, B, C, A, B, C, B, and then you have A, B, C, A, a flat B, and because this was in 3, you need a B back. That's what we are expecting tonight, some degrees, some euro strength or risk on trade. And then another C way down that should be looking for around 137 area, when this pair should start a new leg to the upside. Very clear in my eyes. And then we go to cable. What do we have in cable? Same scenario, like everyone else. The move from October the 6th to the 31st. And guess what happened after the 31st? We have A, B, Z, W, S, A, B, C. Let me point out that it can be also a triangle. When you have A, B, C, D, but in that case, cable needs to bust higher. I believe that the other scenario is more clear at this time, that the triangle, right? I believe that I like this. It goes with the double 6 sound, the euro, with everything, but very clear in my eyes. Also goes very well with the euro CAD, and also goes very well with oil. When oil already did wave A of 4, it's gonna do a B way, and then it's gonna go lower in C. And I see that pattern almost everywhere, including the S&P, that if the bullish triangle is the one in place on the S&P, we should get on the bullish triangle a B wave of E tonight or tomorrow, a C wave after, and then the move higher. I see that path in a lot of pairs around the market. I can see it even in the Aussie trade. Look, what you need is an E and lower if that triangle in Aussie is the one taking place. So in general, guys, I don't want to get over every individual pair. We believe that the risk trade, it has a recovery in the next 8 hours, and then the risk should get soared again. Getting back to the euro, let me show you an eternity count. Let me see if this one. No, it's not this one. Let me show you an eternity count on the euro, which allow a bigger recovery in the euro. No, this is the bearish, the one that is a double zigzag. A, B, C, W, S, A, B, C to the downside. The other one is this one, which allow A, B, C, W. If you guys notice, I've been calling this move a complete move in both cases. due to the RSI divergency and this low being the 618 of this one. And then in this case, the euro, believe it or not, is going to get back to the high 38 or 139 and then drop back again. But this scenario is not supported around the market, in my opinion, unless that S&P is going to take the 1270 high that it did last night, respect the high, and then it's going to draw lower to break the low that we have marked as an A wave. So technically that's what we see for tonight. Let's see how it comes. I'll see you all you guys tomorrow. Thank you.